Okay, welcome back, folks. All right, this is a 5-minute chart of the British Pound USD or cable. We were looking for a move lower on this pair. We were able to snatch a real easy 20 pips, easy in the sense that there wasn't much drawdown against us, but it wasn't easy holding on to it because there was a lot of delay in the price. Market has really done nothing. We went below the previous lows in here and took profits there on half the position, and obviously I gave instructions on Twitter that are following that position that I had collapsed the trade. I was unwilling to hold on to it. It did move up a little bit more. It didn't pierce any short-term highs in here, but we're still above the New York session midnight candles open. To me, that's not good. It's not high probability for a short. It would probably indicate we're probably going to come up here and hit this level. And this is not a trade idea. This is something that you can practice in your demo account. If you see an order block like this one here, if we move away from it and come back down, test that to see if you get a response. Again, it's not a trade recommendation. Okay, you're just trying to see if it has a willingness to go up here, because it indicates here that it's not wanting to go down just yet. So while there are still some liquidity reference points below the marketplace relative to what we described in the London session, it doesn't appear that we're going to get those right away today. So to a 15-minute time frame. We are in a consolidated market profile for the day so far. I'd be interested in taking a short if we get up into this area here, and I'll review that if and when we do this level at all today. It doesn't have to mean it's going to do it today, but if it did, I'd be interested in taking something off of that if it gives us between now and 9:30 in the morning. Otherwise, I would just sit on the sidelines and remain flat. Euro, still stuck in the mud, can't go anywhere. Dollar, we almost hit the order block I mentioned this morning in London. Didn't quite get down to it. It was only 1 pip away. Low comes in at 95.41, and the block starts at 95.40 at the high, 95.40 open, and it did not touch that. So we might get some sensitivity there. If we slip through this, the market is going to be very, very indecisive then. I want to see it maintain its consolidation in here and try to expand up to these liquidity points here, 95.95, 96 big figure, and it stops as well over here. I'm not interested in a dollar sell-off. I don't see that here, but if it does break down, that just puts me on the sidelines. If there was anything that was noteworthy for today, for the London session, it was the importance of why we take partial profits, why we have time stop procedures. In other words, not just simply, okay, I'm buying here and I want it to go to my profit objective and my stop loss is here. We don't just wait for one of those two events to occur. We have another element there to consider, time. If we don't get the feedback that we're looking for in terms of indicating that we have a solid setup, and you're going to learn that the best setups immediately move in your favor. If they just, if they monkey around and they don't really move in your favor right away, chances are you probably got a dud. And this morning was an indication of that. Once it went below the short-term lows on cable, we were looking at these lows here. When price shot down below that and just sat there and we saw no expansion, remember I was saying if we got below these lows, we want to see speed and expansion lower to show indication it wants to quickly get down here. It showed no willingness to do that, so we covered the half the position there with the expectation that, hey, even if it comes back and hits our stop, it's a no loss day, but we had an opportunity to get in here and experience the price action relative to the things that we teach. Obviously, we came all the way back up into the range, into the bearish order block again. And again, one more time, sold off, right back to this bullish order block. So we're trapped in between a bearish order block here. Okay, we're stuck in between. How am I going to do this here? we're stuck essentially in this range here. Okay, we have the order block here for the buy side. Even though it was wiped out here, that's what the price has been trading at. And we have the bearish order block that we're stuck in. So until we get out of this range, okay, the market's going nowhere. And it might join the party that cable's in, which is rather boring. The dollar, you know, hopefully it stays above this bullish order block here. If it gives way, again, that immediately puts me in a neutral stance where I have zero opinion as to what I expect, bullish or bearish, on the market. We would have to see something new in terms of expansion that isn't seen presently in the charts for me to make a decision. Still looking for a run on dollar CAD 32.50 to 32.60 on the upside. We'll wash out that high probably today on the crude oil numbers. If we lose the low, not low, but if we lose the 31.25 level, we'll probably have to come all the way back into this range a little bit more. And that's not really good for the market structure that we have in place. It's already broke this high. We don't really want to get back above and below the high that's broken here for it to run up to this level here. So if anything, it can come back down and retest this level, 31.25, 31.30. But if it gives that level up, it's probably not going to be running these stops anytime soon. And we'll probably have to spend some time sideways for a little while. But as it is here, this morning we're looking at 32.50 to 32.60 on an upside dollar CAD relative to the crude oil inventories coming out at 10:30 in the morning New York time. So one more quick look at euro pound. We noted the stops here real time as it was going below it. We came back away from that. And again, you can see that in the London presentation. Real quick, if you're watching live and you're having issues with getting the recordings, the easiest way to do it is go on the forum, right-click on the link where it says video link, right-click that and save as. When you click on that, the window should pop up saying save as, and it should be MP4 file, and you just name it whatever you want. Once you do that, you can pull it up from your hard drive and play it from there. It's really not meant to be streamed off of the forum or from my direct links in my website. It can be done if you're patient. You just wait for the file to download, but it's just much easier just to do it right from a straight download and have it to your computer and archive. I think that's about it. I want to talk about yesterday I had a session where I started to talk about, and thank you, Peter, for reminding us, get ready to say it again, for cable. And what I was explaining was I went into the discussion about when we have a busy London session in regards to high impact or medium impact news events, and then there's a vacuum of anything going on in New York. And I prompted everyone to get their notepad ready, and then it was a patience lesson that I didn't intend to have. So there was a delay of a full day before we can actually get that revelation. But what I wanted you to note in your notepad relative to what I was prompting yesterday in regards to, once you understand this and there is a high impact news event, or if there's a lot of impactful news releases in London and then there's nothing during the New York session, what that does is it actually frees up the New York session to London close, where it becomes a one-way show where the range will expand. You have little resistance at all, and then you want to look for your objectives, average daily range. You want to look for previous day's higher lows. All those ideas become a much easier way of obtaining your profit targets when there's no more news releases. In other words, you won't have that speed bump concept of, well, it might still be an up day, but we'll have to encounter some resistance here during the 8:30 hour to the equities open at 9:30. And again, everything I say is relative to New York time. So normally when you have news around the New York session or inside the New York session, there's this resistance or barrier window between 8:30 in the morning New York and 9:30 where equities open. Okay, so when between 8:30 in the morning session time in New York to 9:30 stock market open. If there's any news events in there, that's going to act like a speed bump for your daily objectives. So if you're trading the daily range relative to entry at London Open, you're going to have to wait out some measure of retracement or consolidation between 8:30 in the morning and 9:30 in the morning New York time, and before you see that London close opposite end of the daily range that you're holding for. I said that yesterday because that's the reason why we saw such a real nice move lower in pound dollar. Once I was aware what I was looking for initially was wrong, I had further clues given by the dollar index, and then looking for the consolidation in the euro dollar. When the euro dollar is do me a favor, when we're doing live sessions, try not to tweet, because it's going to alert and then pause the presentations. Since the euro dollar was in consolidation yesterday, euro pound had upside objectives still to be met, and cable was weak with a slight stance on bullish dollar. Everything was in line for after the London close moved into New York overlap. Once that New York session began, you can see an acceleration in price action, and that's exactly what you see here. Here's your retracement back into New York session, and because there was zero influence of the New York session news embargo, okay, between 8:30 in the morning to 9:30 equities open, that's why you had this quick rundown. There's zero resistance whatsoever, okay, and you're going to learn about those, okay, and why this level was real high probability, because this level that we noted yesterday in the session while I was recording and outlined and gave you the reasons why I chose those levels, they are known as low resistance liquidity runs. And the reason why they're low resistance is because there's no news that's going to impact it. There's no technical institutional levels that's going to impact it. They're easy to run to, and then if you understand that coupled with time and price, it's very quick, and then you allow yourself to relax and expect speed and magnitude of the moves that be seen in price action. When you have resistance, okay, or high resistance liquidity runs, the objectives will still end up most likely being hit, but you have to go through a longer period of time in consolidation, and you have to weather being beat up a little bit and held back during these news events. And that's why it's important to trade in low resistance liquidity runs, okay, when conditions are like that. And again, I'm going to give you all that. It's all part of this month's teaching, so don't let me discourage you thinking, well, I don't know this stuff and I don't have time to look through all those tutorials to catch up with that. All that stuff's being taught to you in the teachings. You've already got 2 of them for this month. You got 6 more for September, and we're going to talk about all these things. So just relax. You can't have it all in one time. You got to learn it step by step. And I'm giving you examples. And what I went to say yesterday was in your notes, when there's no information that's going to be released in the form of a market driver or news release or data, if it's nothing in there in New York, that gives a very clear way for price to expand and run towards daily range. When you have high impact news, even if you have a high probability setup in London, if you have high probability news or medium impact, rather, sorry, high impact or medium impact news in New York, that will cause your objectives to be later in the day, and it'll have to take time to get through that. And then you're going to wait for the response on those news events that come out between 8:30 and 9:30 with equities open to see if it's going to recapitalize what's already established in London. In other words, if you're bullish London and you've been long in a high resistance liquidity run condition in New York, if you have high impact or medium impact news, you're going to have to wait for sometimes a little bit deeper retracement or consolidation, and then expansion takes place where it takes you to the opposite end of the range or an up close. So we'll contrast all that obviously in the 2 distinct teachings, low resistance liquidity runs and high resistance liquidity runs. You'll learn that also most of my trades when I'm taking live funds are trading in 1 high impact or 1 medium impact news event in London, with little to no New York involvement for news. They're just like, they're the best trading opportunities of the month. They're just easy. Everything's so technically perfect. You just wait around for those conditions, and that's where you want to put your money. You're going to encounter a lot of things when you trade outside of those, and it makes you a better trader when you're trading in high resistance liquidity runs, and when you have conditions where you have to wait it out. It teaches you patience. It teaches you market reading. Okay, we used to call it tape reading before it went to all electronic, but the ability to read price as it's happening, okay, that is taught by you being in here every single day, not just with me in your own studies as well, but more importantly, you're going to learn that there are specific opportunities and specific conditions that frame high probability, low risk, and big payout conditions. They don't happen a whole lot throughout the month. There's only probably one per week. But if you do your homework, you can see it all on the economic calendar. That's why we start there. We look at that, and you can look at that for weeks in advance and say, okay, these are where I'm going to be really focusing on for that particular day. And you can outline some conditions relative to that calendar day and what would be seen in price. You can plan everything you're expecting to see because you know what kind of trader you are. You're looking for an optimal trade entry, or you're looking for a bullish order block, or you're looking for a run on stops, or you're looking for a void, okay, back into fair value. Whatever your trading concept that you like right now, and it may change over time, but you will know exactly what you're looking to trade around that day with those conditions. And then you apply time and price, day of week, all those things come together, and you have a complete package of how you are going to engage the marketplace. And then that becomes your trading plan. That becomes your trading model. And then it evolves into your business. You're not going to be tug of war emotionally, psychologically about chasing something new or worrying about missing an opportunity. You know when you're going to take a trade. You know what you're going to do when you sit down in front of the charts. If it doesn't meet that criteria, guess what you're going to do? Nothing. And you're not going to be upset about it. You're not going to pout. You're not going to go online. You're not going to send me emails. You're not going to send me direct messages. You're not going to go on forums and ask for someone else's opinion to support you. You won't care because you know these things, they repeat. They reoccur over and over again, and there's no reason for you to be upset about missing a move. There's no reason for you to be upset about being in a move and it doesn't come to fruition. All those things are losers mentality. I mean, that's a weak-minded individual that has no understanding of what they're doing. When you understand by way of experience, seeing these things over a period of time, when I said I'm collapsing that trade this morning on Twitter, I guarantee you some of you are like, man, this is bogus. This wasn't even worth it. But look at the reaction in price since we did that. That's what I'm trying to communicate to you. Do you really want to be sitting in an environment like this? If we're net short or even net long, do you want to be in an environment like this? That wasn't rhetorical. I'm actually asking for feedback. Why? Why is it not something that we should be exposing ourselves to? There's two reasons. Number one is what? Exactly. You're expending mental capital. You're wasting all this energy worrying about something that has now much less probability coming to fruition. So really what you're doing is you're hoping, and hope has no business or place in trading. Zero. Has zero place in trading. The second thing is it's not meeting our criteria anymore. So why would you want to see? Because what you're going to do is you're going to hold on to the position and hope that you're wrong about what you should be doing by exiting, okay? You are going to say, oh no, greed allows me in here, I want to be in here, and I don't want to be wrong, so I'm fearful about being wrong and getting out, and then it moves in my favor. You're going to learn by experience every single day. There's going to be opportunities where it looks like it's there, and we're going to take a loss. And then sometimes we're going to get in here, it looks like it's there, and it won't come to fruition, and we got to cut bait. Then there's going to be times when we get in there, and it explodes in our favor. There's going to be other times when we get in there, it moves a little bit, and then we wait, and then we wait for New York, and then all of a sudden it releases in price, and then it'll see our objective. There's four conditions that's going to have to be experienced by you. And you all want just give me the good ones, and I don't ever want to take a loss. I don't ever want to have any adversities. I don't ever want to be in a marketplace where it does this type of stuff. And there's no recipe for that. I'm going to give you a framework that helps me do what you're seeing me do, but there's sometimes I'm wrong, and sometimes I will get a wrong read on price, and hopefully I will learn quickly, like you saw yesterday, I can change gears and go the other way. That won't always be like that, so don't think that that's always going to be the case. Sometimes I'm going to get wrong. I'm going to be wrong. Invariably, I'm going to be wrong because I'm forcing myself in a condition I'm not always doing. I'm not every single day looking for something. But because I need to show you by experience, you have to be with me every single day, seeing what I see, so that way you understand what goes on in my head. And if I can internalize what I see in price action and then communicate it hopefully effectively, and I'm learning that because it's not something I normally do. So admittedly, it's a little cumbersome for me. So if you signed on, you expected me to be a motor mouth like I am on a rant like now, while price action's happening, there's just simply not that much to talk about. And it's actually, when you're in a trade, it's actually very boring. And that's why I listen to music or I listen to audiobooks while I'm in a trade. But long and short of it is, you need to have these experiences, and that's what I've been asking folks to do since 2010, to get in there and use the concepts and the tools, even the barest form of them, to expose themselves to time and price and seeing the effects of being every single day in the marketplace, looking at price, studying price, because you're going to learn from it. Did any of you understand why at the very moment I said I was taking half the position off, once we went below these lows, once I took half off, did any of you feel like, why is he doing that? Because once we break these lows, which is what we were expecting to see anyway, when price failed to do any more expansion once we took out that equal low, because it went just a little bit below it and stopped and hung around there for a little bit, and we showed no speed to drop faster. We had no willingness to reach for the stops below these levels. What is that really indicating? It doesn't show any willingness for the market to seek liquidity on the downside there. Otherwise, it would be in a rush to go to it. It's indicating it's a run on stops under the lows. And as I was looking at it, I'm like, okay, I might be wrong, but it's better to take something off and pay yourself. Do not listen, and I mean this, and I don't care who it is that says it, do not listen to people, traders, online media people, supposed gurus, teachers, service providers, mentors, talking heads, whoever it is, I don't care. You put the title over top of them, and I'm telling you, if they tell you don't take partial profits, that's the stupidest thing I've ever heard in my life. Don't ever listen to these people, because they don't know how to trade and they don't know how to make money consistently, period. Professional traders pay themselves. That's what we do. And if you don't learn this skill, you're going to be in bad conditions and have an opportunity really to pay yourself and still not see the trade pan out. Like today, we were wrong. We were absolutely wrong in the expectation of what the cable was going to do. But we got 20 pips out of it. How can you argue with a condition like that? And the only way you arrive at that is, number one, being flexible, admitting that you're not perfect, admitting that you may not read price accurately, or, here's one for logic, the market just isn't ready to move. Think about that. And that's what we're seeing here. So it's important that you have all these things that play out in an internal dialogue every single day. These things will be communicated to you, and by habit, you'll pick up on these same things and you'll start doing it. Okay, just like people that teach my stuff, you can actually hear all the things that I say, the mannerisms and the way I refer to certain things. It's like a fingerprint. Well, because of daily involvement with me and reading price together, you will, by default, learn how to internalize price action and how I do it. I mean, good grief, you got 200 days plus with me for the next 12 months. You're going to do it. Trust me. It has to take time. So suppress all those desires about, I need to know it right now. You don't need to know it right now. You trust me, you don't need to know that right now. You need to understand what it looks like on a day-to-day basis, what trading really is, okay, because it's not all fast bucks, getting in there, in and out, and you're done for the day. Sometimes it's like that, and that's gravy train. But other times it's kind of like this, where there's a setup, you trade it, and it doesn't give you anything. So if you can manage to get something out, great. Your risk was defined, you took some money out, and you can walk away and feel, okay, well, I didn't waste any of my time. I got a deposit in my experience. I got a deposit in my account. I got a deposit in my PIP haul for the week. And I don't feel rushed. I don't feel like I got to go back in right on that. I don't have to go back in here. I don't need to prove anything. And that's what you need to do as a trader. You're doing this to be profitable, not correct, not 99% accurate. You're only doing this to make money. That's the number one reason why you're here. That's why you paid me, because you want to learn how to make money. You're not here to learn how to, talk about the markets. You want to get in here and understand what it is that you're going to do on your own independently apart from me. So when we do things like this and it doesn't line up, don't marry the vein. In other words, if we got a trading idea, don't insist that it has to be that way, because the market's going to do what the market's going to do, and you can't, and I can't certainly impose my will on it. Hang on one second here. Okay, this is actually a good question. There's a lot of, again, a lot of the comments, I appreciate your you're wanting to be interactive with the live sessions, but it's I really just want to see anything that comes up that's a real sticking point for someone. If they make a question about that, or if I need to be reiterating something, then obviously I'm looking for that. But the question is why was I not interested in seeing it want to go back above these lows? Well, think in terms of the simple support and resistance. We broke through it rather aggressively. It can come back. I'll allow it to come back up there and be good for the trade. That's what we were discussing in London. But I would have much rather seen it do the run up to that before the economic release, okay, at 4:30, and then drop off, and then come back and hit a bearish order block that would have formed at that level. Then it would have been lock. It would have been very easy for this market to drop down because everything would have been in place. But we are stuck in here, okay? High probability would have been the market during Asia into Frankfurt going into this level here, and then retracing a little bit, then running one more time at 4:30 when the numbers released. Whatever that up candle would have been after it hit this level, that would have been it. That would have been a really good setup for a sell. But because they left this exposed area where it didn't come back up and hit that low as a resistance price point, it means that they could still come up there later on. And because we're trading in London, it can do that in New York, even if we have a drop-off in London initially. Why would I be looking at this low and not the bearish order block up here or this one? This order block you're asking about, Kim? This one right here you're asking specifically about? Okay, because the order block is above these lows. And if it's going to be good, it's going to stop right here. There's no necessity for them to come all the way back up here because they broke all this support. So think about what's going on. The books are net short up here. They don't want to come back up into that range because the likelihood is they may end up getting people that are waiting for a deeper retracement to get on board with their shorts too. They don't want that. They want to keep the pain on those individuals that are long so they can do what? Squeeze them out of their positions. And that gives more liquidity. So the short answer is this. Once we broke these lows, this whole consolidation, once it broke and it did aggressively, you don't want to see it go back above this level. If anything, you will permit it to trade back up to that level, but you don't want to see it go above it, because if it does that, this break in market structure is not as significant as it was when it broke it here. Does that answer your question? Or at least make it a little bit easier? Why would I expect it to go up to that level before the news events? Because that would be protractionary price action or Judas swing up to a logical area of institutional order flow. I mean, the fact that we cleared these stops is enough, yes, and I mentioned that during London, but I would have much rather seen it hit that level, because it would have been a return back to resistance or support broken out resistance, and then we would wait for a bearish order block to fill, or form rather, and then come back up to it later on during the economic release. It just would have been no more reason for it to go back above that level, and we could not be fearful about how much of a rally the 430 event would have caused. That's the reason why I had to have my stop up here initially, because we had this exposed area here, and I could have been wrong, and it could have came all up and hit that bearish order block anyway. So that's why it caused a larger stop. And that's the reason why as well I didn't want to see this level fail to get to before the numbers release, because to go there allows us to have a smaller stop. But because it didn't get there, we have to have a larger stop, allowing price to move a little bit more. We might get it now. We went just below this low here, but again, same scenario we had here. It has to expand quickly, and again, it's still not doing that yet. If you're short, yeah, I would go to break even. We're in New York now, so US CAD's expanding. We got a small little area resistance there. We got to watch the 32 big figure. And I don't know, I think we might have this now. All right, so we have New York's midnight candles opening here. If we come down a little bit more, don't run yet, and come back up into here, right to the bottom of these up candles, that'll be a retest of New York's open at midnight. And then we could probably see it run exposed liquidity below these lows here. Dollar CADs. It's this would just have to be an observation one. I wouldn't take anything where we're at now. I mean, to be long ahead of such a short distance on a resistance, because it could still soup in there. It could go up above it and then retrace, and that's not what you want to be in. We have bullish order block here and here. Now we're expanding. So I don't think I have anything for entry for US CAD, or at least not yet. Fiber's still dead. I like dollar. Dollar still looks good. I think we're going to probably, on the crude oil numbers, we'll probably want to run. Per pound. There, look at that right there. Who was here during the London session live? Which of you were here for that? Did you see me make a notation of this right here as it was going below it? Sorry about that. I had to send my son off. He's being taken to school by his older brother today. All right, so we're going to look for CAD to run through 32 big figure with momentum and no willingness to want to come back below it. Cable releasing. You got to watch this order block though. Still early in New York, so we have our expectations are if it's bearish, still for the day. Okay, can you guys hear me? Okay, it's probably on your end, Tanner. We're looking for a run below this low. Now I would like for it to come back up in here just a little bit between now and 820. Between now and 820, if you get a little bit of a retracement, that would be a very nice setup for New York to be short, and then we'd have all this price action above the opening at New York. I'm sorry, the opening at midnight in New York. So all this would be the high of the daily range, and then we're going to be in the body of the candle that forms the daily range, and we would be in position to expand or ride the expansion rather down to the objectives we've outlined here. I am starving. My stomach is growling like crazy, so if you guys hear it, I apologize. I didn't get a chance to eat anything before I came back on. All right, let's play devil's advocate for a moment, okay? Because there's going to be times when we do this, and this is the reason why I don't want you guys jumping in here late and hearing me say, okay, we're going to put a sell here, and then all of a sudden you think, oh, this is it. I'm going to do this, and this is how it should be. We have an expectation that price should go lower on pound dollar. We have levels that we've outlined where we think it may go ultimately for the day on the downside. So we're focusing primarily being short dollar. I'm sorry, long dollar, short cable. Fiber's not doing anything. It's not moving. Dollar's maintaining its consolidation here. I would have rather liked it come down and hit that order block, but that's okay, not necessary. I expect this thing to want to go higher. We're seeing that evidence also in US CAD. Real quick across the board on Swissy. Not so much strength on the Swissy. And on the dollar yen, at an order block, nice stop run here. So we could get some expansion on dollar yen. So I like the idea that dollar has a reason to want to go higher. Cable's already been loose on the downside, and with fiber tight in a consolidation, euro pound has reason to go higher, which we've indicated here. But assume for a moment you're Johnny Neophyte. Okay, you're in there. You have a conclusion that you think it's going to go lower. You're in the New York session. If one were to want to trade short right now, and I'm not saying to do this, okay, but we will do exercises where we contrast, where we still have a directional probability of higher or lower with levels in mind. I will purposely tell you in advance, okay, we're going to do this with the understanding of how much drawdown you have to encounter by entering here versus entering right at a bearish order block or a bullish order block. So understand what I'm about to say is this is not an invitation to do that, okay? I'm just telling you right now, if you were to get short and you want to sell it right now, the question is where would my stop loss be? The stop loss would have to be above the daily high. So in other words, if you're looking at it here, right now is where we're at there. It's a 45 pip stop. Now, contrast that with if we get a retracement into here, it only needs to be a 34 pip stop. And that's why we would expect to see a little bit of retracement during the 8 o'clock to 8:20 time period. That's a classic scenario you would see on a daily range. And it looks like this stuff here. Okay. New York is the easiest animal there is in trading. I mean, it's the easiest one to trade because even if you're wrong about your interpretation of London, many times you can still get a range out of what's set up in New York. And what I mean by that is the high we made here, we came down here and then rallied back up. If you sold here and just got your profit here at this old low and say it was reversing at that point, that's still an area which you can take profit. I mean, it's a small little intraday move. I mean, some of you want that on a daily basis, and you can study the New York session for that reason. But if you have a daily range idea where you think that the New York session is going to be just a retracement or a pause for the second leg in the daily range to unfold, then it gives you a lot of reasons to get positioned and then wait for 10 o'clock to 11 o'clock in the morning New York time to get that complete daily range. Yeah, the interest rate, that decision or lack of decision is what's causing all this consolidation and this meandering sideways. The markets don't have an opinion yet, and the market makers are building in interest relative to the consolidations that we're seeing. So regardless of what the interest rate announcement is going to be, we'll already have an idea of what the market should be expecting based on what the consolidations have priced in. And wherever the easiest money is to knock out, that's where it's going to go first. So again, interest rates, I could care less about the interest rate announcement. I just know when it comes, it's going to be a lot of impact in terms of where price is going, in terms of magnitude, speed. I wish they would just raise interest rates and be done with it. But what I want doesn't make a difference. No, it's the fact that interest rates are on the horizon and dollar really hasn't escaped its range. And the play is really in euro pound. Well, if they raise interest rates, that comes with a lot of other things too. But just for movement purposes, I would love for them to raise it up. All right, so we're getting a little bit of a retracement in here. Yeah, there's a lot of things that's having an impact on the wait and see mentality. if you look at the economic calendar for the entire week. No, my son's actually I just told my son to turn the TV down. He's watching a TV show, and sometimes you'll hear that stuff in the background. And if I pause it, it's usually me telling him, hey, turn the TV down, or hey, be quiet. This time of day, they're active because they're getting ready to go to school. And they'll either come in and ask me what's going on, whatever, the dad stuff. Well, it's been rumbling, but it's not that much. All right, so what we're looking for again is this focus, guys. I want to see this candle here. I want to see that get traded back up into the very minimum. I want to see it hit this low of these candles. If it hits that, I'll put a short on for New York and see if we get some expansion on the downside. So I'm not requiring the opening at New York to be retraded to. I'm really only needing that. So if the candle can hit 31.96, I'll go in at the market short. And that's Bella. Hang on 1 second. She wants to come inside. Hold on. All right. So anyway, if we get the run up to this level in here, and I may actually need to do this, use the bodies of these candles here. This down candle body, this down candle's body. So if we trade up to that, I'm ignoring the wicks. I'm allowing the price to come back up to 31.94. If it does that, let me change this to 2 lot. That way it'll allow me room to take something off once we take the lows out here. I'll take first profit there with another 20 pips. If we can get it, I'm not saying it's going to happen because I don't know, but if we get a retest up to this level in here, I'll sell it at the market there, look for first profit once it blows below these lows, and then we'll leave the second lot on to see if we get those lower level objectives for the daily range. Right now we're just about crossing halfway point of true day, and again that's defined by the blue line, midnight in New York and 3 o'clock in the afternoon New York. So we're right in about the middle of it. And since, here's the other thing for your notebook, if we do get expansion, we've been in consolidation this entire day, a very little range, real tight little range, and if we get expansion, should it come by way of slow, lethargic price action, or should it be quick and decisive because of what? I kind of like really leaded you in that answer, but right, so there's less time, okay, less time in the day. So if it's going to move, will it have to be done quickly or will it move lethargically? Exactly. Everyone's saying the same thing. Very good. It has to be done quickly. So it'll be a quick run. So it goes consolidation to expansion. Okay? If that happens, if we start seeing it move, it should move rather aggressively to take the stops below the marketplace. That's what the assumptions is. And it's 8:15. I want to do it now. No, it might give me my price. And what I'm waiting for is to hit it. As soon as it hits that level right there, if I can get it to show up. well, just line. Just watch the line. If it hits it, I'm going short right there. The stop will go above this high here. This is dealing range for the bearish order block. So if it goes there again, I don't want to be in the trade, and I'll just take the loss and be done with it for today. Yeah, the dollar looks good. Euro's asleep still. CAD's about to hit that 3,200 level. Aussie I could care less about. Euro pound. You want to make sure they hear you, huh? Well, the question is, what's making me change my mind about shorting the cable? Because this is demo, and I wouldn't do it with live funds right now. It's just going. It goes against my. I don't want to be a seller of cable, but because of teaching purposes. Oh, gotta focus, guys. Okay, went in right at that level when the buys of the candle. All right, stop needs to be at 32.25. And we'll look for 40 first. We'll adjust it after it gets on the chart. $26, 1, 2, 3, 4, 5. All right, so that's that. I have 2 lots on, permitting me to take one off. If we get a rollover and price does come down below these lows, I'll wait to see if there's any expansion. If we get that, I'll take one of the lots off, and then I'll put the stop to just above this short-term high. And then once we take out this level here, it will go to break even. And if it goes to a full stop out, then it is what it is, and you guys got to see me take a loss. Now, since I'm short pound dollar in the demo, what would I want to see to confirm that trade in US CAD? Even though it's not directly related, what would you want to see in this? You want to see it go through the 132 big figure, as we outlined here with this level. Okay. You want to see it decisively go through that, not just poke its head above water and then come back down. That's not what you want to see. If we see US CAD run aggressively through this and we see dollar even just stay like it is right here, that will allow this pair to expand and go lower. And again, it's all market symmetry. When everything's in agreement, when things are supported in other pairs, conversely, if there's an inversion between the relationships, like pound dollar, if it's going down, then US CAD should go up. But if you see a level like we're approaching here, this is a really good environment for you to learn in, because even if I don't get the pound dollar to unfold favorably and go to these lows to take first profit, let's play devil's advocate for a moment. Say that US CAD does in fact go up here and then turtle soups and just rejects. That would be a perfect illustration of why you need to be paying attention to these things in your own trades, because if it does this, okay, if it goes up here and it fails and starts to come back down, it'll allow you ability to collapse the trade and not get a full stop. In other words, it doesn't give you confirmation that you're in a good trade. Does that make sense? We don't always just wait around for a full stop out. That's what I'm saying. Just because we have a stop in place doesn't mean, hey, well, I'm willing to lose this on a risk, but if I can get a discount on a loss, then I'll take that too. So we're always managing and balancing and weighing things. It's not just simply get in there, take the trade, put your stop, get your limit, and walk away, or just worry about this one. You're looking at the general market conditions across all the other pairs, and ones that are hitting major levels, we want to see a willingness for them to drive right on through that, show very little interest in stopping or pausing, and that would build more confidence that what you have in your other pairs that would be inverted to what you're expecting to see in here. You're expecting to see prices go higher in this pair. That would translate into expectations of a lower price move in cable. The question I got was, why wouldn't this bullish order block be a buy? Because we have an exposed range down here on that liquidity void on the hourly chart, which we'll look at in a minute. I just want to see if this thing is going to be moving. Right now it's exactly when the CME starts trading, so let's see what the effects are after the future starts trading. Now, if this would have happened here, okay, at the completeness of, let me have a fresh chart to show you real quick. There's no way I could do this with live funds and be able to talk to you. There's absolutely no chance that would have happened. Yeah, we have this void still on cable here. Had it been like these two lows here happened right at that, then it would be, then the order block would be more influential on the upside near term, not like picking a low or anything like that, but because we have this exposed range between this void and the lows that formed, that's why I'm telling you that I don't personally believe that this is a buy area. Does that help you, Matt? In other words, in simple terms, I believe that they're going to want to take the market down here still. So anything bullish here would just be minor. And the more money is below the marketplace here, because they showed a willingness to drive price aggressively, and somebody chased that, and we're dragging the price down against them now. And ultimately, those that want to have wide stops, they're going to place them below here. And I believe that's what we're going to end up seeing priced for today. 31.57. So that gives us a decent amount of pips for a downside objective if we can get some expansion. Yeah, it's a valid point. Chris is saying exposed ranges on both sides of the day is a bad day to trade. It is. I mean, the probabilities are not high, but if we're going to get in here every single day and teach and practice and give you framework to go with it, as a trader, you got to do it. I can't run a service just doing one trade a week. You guys will be quickly bored with that. Well, yeah, Kane's asking it could be waiting for the news at 10:30. It could be. That's why I'm hoping that it drives through. Shows no willingness to stop here and drives through ahead of the news, because what that'll be is they're actually pricing in what that report is going to give us, and then it'll probably be a strong rejection lower after the news. If we stay below this level before 10:30, which is highly unlikely, we're so close to it, I would expect the news report to drive it higher aggressively. But I don't want to wait between now and 10:30 because we have a short pound on. I do when I'm really aggressively positioning for CAD. I'll watch crude oil, but for minor fluctuations like this, I'm not really so concerned. I just know that the crude oil numbers are going to influence near-term volatility in the CAD. I don't know which Matt it was. I just remember seeing Matt. Sorry. It's a lot to balance between watching price and then fielding questions if they come up. That's why I was asking if everyone would just keep you don't even have to say thank you. It's just, if you need some, if you need some more insight about what I'm saying, then yeah, prompt me for that. But like opinions and stuff like that, no offense, I'm not really interested in your opinion. I'm okay with being wrong. I tried doing the question stuff after the video, and I ended up being here for like 3 hours, and that's not what I want. There's no way you guys are going to be able to digest 20 hours a week in video content. There's no way you're going to do it. There's just absolutely no way. So a couple times a week, I'm willing to spend an hour and 20 minutes, something like that, in a video presentation when it warrants it. Given the conditions we're trading with today, there's a lot of explanation that goes along with this. There's going to be days where the market just responds really well, and we can do the session in 15 minutes. Everything will be done. It's over. There's nothing to really talk about. But because there's more to talk about when you want to be avoiding trading than there is about what actual trading in high probability conditions look like. It's very little things to concern yourself with high probability. Low probability is a lot of things to concern yourself with, and it requires a lot more jawboning and being in here explaining what's going on, why it should be doing this and why it shouldn't be doing that. The question was, will I have more discussion about using relationships with other pairs to support your trade ideas? Yes. It's intra-market and inter-market analysis. You'll have all that stuff given to you. Okay, CAD's hitting at 132. Hit it, 132. Again, we want to see it expand aggressively through that, not these little wimpy candles where it just wants to peak its head above it or just touch the 32 big figure. That's not what you want. You want to see them reach real deep, far beyond that big figure to gather up any liquidity. Because think about it. I mean, it would be in their interest to drive price higher, because looking at CAD here, is it a safe bet that the banks are net long on this pair, dollar CAD? I mean, pretty obvious, right? I mean, this is obvious that this pair has a net long book at the bank level. So if you're going to see a level like a big figure 132 even, is it in their interest to just offer a price just at 32 even, or to gun it through there, okay, to reach for liquidity that would be well above just the 132 big figure, because that's where they want to exit. So the expectation is we don't want to see a wimpy just touch 132 even. We want to see them drive it through it, and we would expect that to happen because the book's already net long, and they want to exit at a higher price, not just a wimpy old big figure. They're going to try to drive it through that. That's what we expect or anticipate when it occurs, especially by knowing what's already happened, where prices moved from. It's all about role playing. Okay, you're the bank, you're net long. Do you want to take profits here, or do you want to offer price higher where you can unload them at a higher price and get more profit? Obviously, you're going to offer it at a higher price. So for trading at a big figure level, you anticipate, and this is the reason why when we talk about big figure trading, it's always at least 20 pips above or below. In other words, if it's moving up to a big figure, it won't just trade right to the big figure and stop. Many times it'll go 20 pips or a little bit more than that, usually on average, because there's liquidity resting above these round numbers in the form of funds. So when we see this big 132 figure, the expectation is that we want to see expansion go through that. Consolidation means that there's accumulation of orders, and by looking at other pairs, you'll know what pair is being driven with the consolidations. Like we've been monitoring euro dollar being in consolidation relative to the weakness in pound dollar. This up candle, that's the last line of defense for my idea for New York. So I don't want to go above the middle of that up candle. And I'm eyeballing it, so it's about right. That level is 132.06. So I'm a little distance above that. So I got two levels of defense below me in the form of this bearish order block. We have another bearish order block here, and I'm in the middle of this one here. So if it comes up there, I definitely don't want to be in this trade, and I'm okay with taking that because it's probably going to run. I don't see it here, but I'm just saying if it gets to those levels, that would be the reasons why I would be okay with being stopped out. And when you put a stop loss in, you need to put a stop loss in where, number one, it makes sense to be out of the marketplace, and you would be thankful to be out there, not, oh, it just took my stop out and it could go the other way right then and there. And that's not where you want to put your stop loss at. If you go back over your old charts and entries, many times you probably put your stop right at an order block. And there's been so many people I've seen on Twitter and on Facebook that claim they know how to trade, and they put their stop loss right at an order block. And it goes right to their stop, hits it, and then runs the other way, and they're complaining and crying about, you know, how they got knocked out. And of course, we've all done that, but it's a lot more gratifying when you know that you got stopped out for a real reason, and it's good to be stopped out where you got stopped out at, because it's going to be running the other way, and there's no argument about it. Let's go back over and watch that cat again. All right, so it's poking its head above that big figure 132 even. Again, we want to see expansion through that, not just this little patty cake stuff. We want to get through it, driving it hard. Big candle through that. There's so much money out there. Again, don't worry about this stuff not working. Be nice to see this dollar go up a little bit more. I want to see steady up closes, even if it's marginally up. I want to see steady up close candles, and then it'll expand it. For US CAD, if I was long, well, I mean, you're asking me something that would, it doesn't really benefit anybody by saying that because it's all pure hindsight. I mean, you can buying in the order block here, right at the top of the candle, and your stop have to be below that. Then you have another order block here, which is a propulsion candle because it's dipping into a lower level order block and it's not that many candles away from it. So this is where the actual buying is. So you can actually look at the middle of this candle and where we traded here, and that'll give you the price that they were working in. 31.50. So there's a buy at that there, and we'd have to see if it wants to reach 32.15 to 32.20, which is what I'm looking for. Can you guys hear me now? Okay, a couple people said they lost audio. Okay. All right, so we're just going to sit here and allow price to gyrate. The stops in, you can see that. The objectives are noted, and I will come back in a moment. I'm just going to put you on mute while I do my dad stuff with my youngest. Again, we don't want to see any retracement. No retracements from this level. Ideally, it needs to expand through, because if I was long, I'm going to try to book exits at 32.10, 32.20. So that's the rationale behind why I'm expecting it to gun through it, and it can happen before the news. The question that I got, is it advisable for us to, as traders, to set the stop loss and a take profit so you don't have to be watching price, all day? That's exactly what you would be doing. That's what we have. That's why we have our orders in down here. There's a take profit, stop loss. Stop loss 31 pips. Profit is 62 pips. All order blocks are the same regardless of what asset class. So during the recordings, I'm actually going to speed up all the times when I'm not talking, so that way the videos aren't so gargantuan, they're huge. That way it's only the stuff that makes the most sense listening to. Any periods of quietness will just be sped up for the sake of continuity. So earlier, when my son was sitting on my lap, telling me what he was going to do when he gets home from school, I was outlining this level here. I wanted to see expansion on the downside. We want to see upside expansion through the big 132 figure over here on dollar CAD. We want to see advancement on the dollar index. I'm comfortable where my stop is here, really, really comfortable where it's at. It shouldn't go up to that level, and the reason why is look at how much time we've spent trading all in this area. Okay, all this entire block of price. Let me shade it in so you can see it. I want you to understand it from a conceptual point of view. This entire day from midnight New York to here, all that, let me change the color of it. This entire shaded area, that is very efficiently traded So the range high, or the daily high, coming in at 132.31 to the opening at New York. Well, that would be up here, but the lows created here, we're going to use that reference, 31.94. So that range in price has been really efficiently traded. It's been so many times passed back and forth in that range. The only reason for it to go north would be to take the daily high out. Okay, and if I see it start taking out this order block here, I'm collapsing the trade. I'm going to save the full stop. I won't worry about arm wrestling with it, and it won't be any concern for me because I'll know that it's not coming back up here for an order block. It's coming back up here for the stops on the daily high. So before I go any further, do you understand what I just said there? If you don't understand what I just said, okay, the fact that we've spent all this time, several hours of today, all inside this shaded area between the range low, created this line here, and the daily high. That's like, this is today's high. If we see all this price action in here, okay, each time it did this, it was making a lower low, lower high each time, and it's pressing lower like we were anticipating the low out here to be ran for the liquidity. There's no reason for it to go up to here unless it's going to go all the way above the daily high and get the stops above the daily high. Now, I'm not saying it can't do that. It absolutely can do that all the time. Every single day it can do that. But for probability's sake, for the New York session today, the least resistance, okay, and so this is what I'm going to explain to you here. This is what's called a low resistance liquidity run. The stops above today's high, that's a high resistance liquidity run. It's got to go through this short-term high, 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 just to get to that. And there's multiple layered order blocks in there that it has to contend with going on the upside versus just dropping down here and taking the liquidity below that low. This is a low resistance liquidity run. This is a high resistance liquidity run. My stop is in an area of high resistance liquidity. Yes, the answer to the question that was posted, wouldn't there be buy orders stacking above these short-term highs? Yes, they would be. But you have to look at where remember the analogy I gave? When price is moving across our charts, you got to imagine it as a paintbrush. Okay, the paintbrush can only hold so much paint per stroke. Okay, and as you use the paintbrush that's loaded with that paint, the supply of paint is reduced. Well, a lot of paint has been used up to paint this entire price range up here. There's no area down here painted except for this one tiny little area over here. So it's going to want to go down there and then go into a new territory. Okay, so it's less likely to want to come back above this whole block of price action than it is to want to go down below here. So yes, there are stops up here, but they're not of any concern right now because the most liquidity is below the lows because they've given indications that they wanted to make price lure buyers in. And we gave that nice little rally up to clear the stops. Retail's going to chase that on the long side. So where's their stop loss going to be for longs? It's going to be below these lows because they believe that this is short-term support or strong support or a double bottom. And double bottoms get picked. This is the type of action we're looking for over here. This is supportive of what we're expecting for today's New York session, supporting the short for cable. Now what we want to do is we want to see this order block here give up its ghost. So we don't want to see any kind of willingness to see a snap up. We don't want to see that at all. We want to see it just drive right on into it, eat it completely up. And at the same time see further expansion over here and positive up candles over here on the dollar. If we get that, this is a block. It's going to go down, run the lows, and we'll see if we have any steam to continue going into our lower level objectives. Because it has, okay, the question that was, why don't I put my stop above the equilibrium of the order block? The whole, conceptually, I could put my stop above the middle of this entire range that's shaded in yellow. I could do that. But because I'm balancing being a dad this morning, I'm balancing being a mentor, talking live, I'm processing these things at the same time. So I'm actually doing more than a trader should be doing at the time. So I'm giving myself some leeway to allow a lot more responsiveness on the part of me seeing price and reacting and describing it. In other words, what I'm saying is this is very difficult for me to do and teach at the same time, because I have to allow myself time to talk about it and prepare and outline everything. Would I have taken this trade? Yes. No, you don't want to jam your stop loss to break even. New York trading, you got to take out a old low or an old high before you can ever consider moving your stop. And that has to happen by this down here. When we take this low out, when this thing drops down below it, then you lower it down to this level right here. You gotta still have some risk in it. And that's the part you're all afraid of. You're afraid of assuming risk. In New York, you have the entire range to work within, and they may come back and take stops intraday. So you have to be mindful of that. So don't be in a hurry to jam it down into break even. It's not necessary. You want to give the market some room to move around a little bit, because just normal price delivery, it's required. I really like the fact that we're spreading our wings here on CAD above that 32 big figure. I love the fact that we're seeing dollar starting to come alive over here, and we're just into the order block here. So I really want to see an expansion through this entire down candle. I want to see this entire down candle get evaporated. To kill the trade, like what would be like in other words, what would cause me to collapse the trade and say, no way, I'm not going to hold this? It would have to start trading above this line I have right here. Because to do that, it's already taken this short-term high. It's moved beyond the mean threshold of this bearish order block. And I don't want to see it go any higher than that, because then it's going to reach for the liquidity on the daily high. And that's what I'm telling you. To go up in this shaded area would just indicate it's going for the daily high. And I don't want to be in there allowing it to take a full stop. Everything I've outlined so far is the only reasons it is necessary for where the stop is. In other words, when I say collapse the trade, in other words, if I let the market, if it was the reverse here, say it was the reverse and start going through this level where I entered short, this level at a bearish order block mean threshold. In other words, it's the middle of this down candle, up candle, which is a bearish order block. They sold as price went up. It should not ever go back above the middle part of that up candle after it's dropped. It shouldn't do that. If it does, it indicates it wants to potentially reach for liquidity higher than that. Well, what would that be? Above this short-term high. Well, above that short-term high is what? All these wicks and then the daily high. I don't want to extend myself the opportunity to get stopped out at a full loss that I'm willing to assume at 31 pips. So if it goes back above the middle of this up candle, I'm out. I'm done. And I'll take the loss between my entry and this price point here. Much more efficient way of trading and absorbing a loss. That's cost of business. Versus just saying, well, I'm going to hold it come hell or high water because I'm right, and then watch myself get stopped out on full loss. It's not economical for a trader to, even though have a catastrophic stop, which is what this is. Every stop I place is a catastrophic stop. It's not ultra short term. I need to have 5 pip stops. I think that's unrealistic. Okay, even with someone my experience, I don't think it's necessary to have that. You need to have some risk, and you need to also allow the market to move around a little bit. And that comes, you get comfortable with that idea because you've seen enough price action to trust, it's going to move around a little bit. I'm not going to be too concerned about it, but I know where the thresholds are for me to consider, do I really want to still be in this trade? And I just outlined that here. Well, I'm sure you're going to have all kinds of analogies outside of the painter or the sniper analogies used in price over the next couple months. Equities are getting ready to open up in about 18 minutes or so, 17 minutes. All right, we're making a run for the liquidity here. Let's see this hopefully expand aggressively down, eat this entire down candle up. That means there would be no buying there. Yeah, once we break below the middle point of this, it's going to be a lock. It's going to want to reach for the stops below the lows. That's what we're looking for. So far, dollar on the left is supporting that idea. Dollar CAD supporting the idea. CAD's just, cable's just hemming and hawing still in this order block, which is not what you want to see. You want to see everything in agreement. Big expansion on dollar front CAD. In other words, dollar fronted currencies like dollar CAD, dollar Swiss, dollar yen. They should be all expanding on the upside with the dollar index, and that will free up range expansion on the downside on your pound dollar short like we're showing here. You don't want to see anything give up on this range. Don't want to see anything over here give up and start losing some ground, because that means that they're capitalizing this order block, and that's not what we want to see. We want to see it erode this entire down candle and run for the stops below these lows. Right over there. I'm not sure what you just asked. What is the latest before I collapse the trade? What does that mean? If it gets above this level right here, if it gets above 132.06, I'm taking the stop off and collapsing the trade with whatever that is in terms of a loss. And then walking to the sidelines and just watching the rest of the day pan out. Because I want to keep the idea that even though it could come up here and expand in here, I don't want the mental capital spent on worrying about if it's going to hit my stop. See, I'm not worried about my stop getting hit right now. I'm only worried about, does price have the willingness to drive where I want it to? That's all trade management. It's all psychology. I'm not worried about losing money right now. Not because I'm in a demo account, but because I have more on the line, because I'm actually doing it in front of 700 people. So it's not the money that I'm concerned about losing. It's the fact that I don't want to give you an impression of infallibility. I'm showing you how I really do it, and by keeping the stop loss in a realistic level, it's justified in terms of the risk. It's justified in terms of the price action, and it's also keeping it outside the scope of immediate concern. You don't want to spend your time worrying about your stop loss. Think about it. I don't care if you have ultra low risk and you're using really, really tight stops, less than 10 pips. Even 10 pip stops, I think, is ridiculous. If you're using these ultra tight stops, I guarantee you, your rear end is puckering all the entire time while you're in that trade, until it moves considerably away from your entry. Because you're so close to getting stopped out, you're worrying. You're spending all kinds of mental capital on that. I'm not worrying about anything. Where I place my stop loss, I know I'm so far away. I'm in a different neighborhood in terms of worrying. I'm not worried about it. I'm more focused on where the price is driving. See, my focus is down here. I'm worried about whether it's going to consume this order block here. I'm not worried about it coming all the way up here to hit that stop. There's a big advantage of having that in your mindset as your trader. Because if you're so worried about and consumed about, I hope it doesn't hit my stop, then your stop's too close, or you're over leveraging. That has a great deal to do with how you are going to be positively consistent, profitable, long-term. Your longevity is going to be defined by that. Because if you're consumed about losing money or getting your stop loss hit and it has to be so close, you're doing it wrong. You're worried about the money. And I'm worried about the process of where the market is most likely going to seek liquidity. That's going to be most likely in the realm of reaching below these lows. My focus is allowing me the freedom to be down here, focused here, and not worrying about if it goes against me. I have room to think about if it starts to retrace. Contrast that if I had an ultra short-term stop, rate at break even, or even trailed it down some. It could come back here at any time with the spread and just tag me out and then run below and hit my stop. I'm going to hit my limit orders. There's an economy that you need to apply when you're managing your risk, okay? You need to have an ability to have your stop loss in a location where you're not so overly concerned about being hit. It has to be enough room to allow you freedom to think objectively about price, not worrying about losing money. That's going to be a big, big barrier to your development and your longevity as a trader if you're concerned about that money. If you're concerned about the money, again, guys, please don't tweet anything to me or have me in your tweets because it's going to come on the screen and it blocks the sharing. So the main thing is I want you to understand that I'm not trying to prove ultra short-term and ultra tight stop losses. That's not what we're teaching here. I'm teaching you sound trading, sound trade management. In October, you're going to learn a great deal about, good grief, man. Stop texting or tweeting to me, please. It's pausing the display. I got to turn those notifications off. The main thing is when you have your stop loss on, you got to give it some room and just assume some risk. There's nothing wrong with that. I mean, that's this business. It's all risk. There's no point at which there is zero risk until you're on the sidelines. And some of you would actually argue and say that's risky because you're missing opportunities. So here we are, 10 minutes before equities opening. I promised I would talk about the equities and what may be unfolding. We're in September. Okay, we are in a time period where August and September we usually see equities slide and go lower. The other day we had like a 200-some point decline or whatever it was. I'm not even sure what it was. I wasn't really watching it closely. Everybody got panicked, and the very next day it roared back up. Didn't complete the entire down candle or down range that it lost ground on relative to S&P, NASDAQ, and the Dow. But everybody got real excited, and especially all the goobers that spend too much time on Twitter throwing rocks. They got all excited thinking, yeah, you know, the doom and gloomers, you know, here we are, we're getting, you know, the equities high again. Okay, it's roaring back. And then yesterday we got wiped out again. I think we're going lower. I think we're going to trade considerably lower, and I would have rather seen it make a more stronger attempt to move higher before it started dropping down. But I just think that we're in position to look for a lot more decline going into October. And when we get closer to the elections in the U.S., it gets worse. Well, we still have time. We got about 38 minutes. What is that, 38 minutes? Yeah, 38 minutes before 10 o'clock in the morning New York time. As soon as we approach 10 o'clock in the morning in New York time, okay, we want to be looking for reasons to scale out of our positions, really tighten the stop up then. Okay, until we get around quarter of 10, I'm not really concerned about trailing stop losses. I'm more concerned about taking profits off the table and not worrying about stop losses. I'm not worrying about that. The stop is your safety net. Your stop loss is not your profitable exit. And that's what I'm trying to communicate to you. Everyone's looking at trying to have an ultra short, tight stop loss. When it's like that, when you're using that, what you're asking the market to do is get me out at a less favorable position, exit. Get me out at a less favorable price level. That's what you're doing. See, when I have the stop away and keep it at a catastrophic level where it's protecting me from needless exposure to more risk than I'm willing to assume, I'm in the driver's seat of exiting at a more economical location for profit taking. I'm in control of that. Once you place your stop loss real tight, you've given control to the marketplace to get you out at a less favorable exit. Do you understand what I'm saying? You need to be in the driver's seat of your exits when it comes to taking profits. I don't want my stop loss being used for my profit taking. That's only in the capacity of protecting me from needless overexposure to risk. So it's important that you allow that stop loss some distance from your entry. Don't worry about that stop. It's going to do its job if it's going to be an adverse reaction in the marketplace. Your driver's seat, okay, role in the role of driving your trade, in other words, from entry to exit, that's completely and utterly you. You have to know where to take profits at. And you need to do that when price is moving in your favor, not when it's retracing against you and the stop loss is going to take you out at a less favorable exit. Because many times you'll see that you've seen it before many times, I'm sure. You're in a trade, you're trailing your stop loss too tight because you don't want to lose money. Instead of just focusing on where should I be getting paid? Where should I be taking some partial profits? Remember, there's a lot of people out there that pretend they know what they're talking about. They pretend to know how the markets operate or what they're doing in their own trading. It doesn't make a difference. I'm not teaching you how I trade. I'm teaching you how the markets book. If you know that, you'll know how to trade profitably, and you need to know that keeping your stop loss away from your entry is economical. It's the right thing to do. The stop is a catastrophic safety net. That's all it's there for. You're managing the exits with profit, with targets, limits, scaling out. That's your job. And you're giving the job to the market to take you out at a less favorable exit. A good risk to reward ratio, 5 to 1. You can make money with 3 to 1. If you're really high, really efficient with your trading, you can make money with 1 to 1, but you got to be really, really good to be, 1 to 1. This mentorship is aimed at teaching you 5 to 1. All right, watch cable. All those stops below that low, they are hot. Everything's lighting up right now. Everybody that's long, that has stops right here, you know what they're feeling right now. You felt it before. Oh, man, it's going to get my stop. Please don't hit my stop. Remember that? Remember when you're sitting there and you're talking to God? God, please, just don't let me get stopped out on this one. I'll do a better job. I won't rush next time. Please, God, please don't let it go below that low. Please. All right, okay. Just you can get a little bit closer, but please just don't go below the low. Everybody becomes a Christian in this environment. In the natural order of things, everyone in the retail scope that would be short, they're going to scream that they got to slam their stop loss down real tight to break even, to trail in it, even tighter. You don't want to do that. You just relax. Keep your focus on where the market should reach for. Okay, that's all we're worried about. So far, we're seeing a retracement on U.S. CAD. We have not seen any expansion or even taken out this high on dollar. So this is going to be a suspect run on this liquidity unless we get favorable continuation on upside on dollar and we erase this and make this candle a wick. So we want to see this candle become a wick. We want to see this candle become bullish and take out these highs. Then and only then will we expect exposure below this low to reach for lower liquidity. In other words, go even deeper, lower. Otherwise, we may be just coming down here to take these stops and come back to equilibrium. That's the reason why we want to take profits when it gets below here. Not all profits, we want to take some off. And while I'm talking, I probably should have that thing up to do that very thing. To take partial profits, you go to instant execution. I have 2 lots on. I'm just going to change it to 1. And then if I hit close, it's only going to take 1 off. And it'll leave 1 on from the original entry price, and the stop will stay at original entry. I'm sorry, at the original location. Nothing changes except for the amount of positions that's on. So we'll go from holding 2 lots short to just 1 lot short. And we'll book a profit for, that's demo, but we would book a profit for whatever that entry to exit price would be. And I'm just looking for a move just below these lows. Too many things on this chart now. But the main thing I want you to understand about stop loss orders is don't think you have to have really, really, really tight stops. That's not the secret sauce to everything. Okay, you're not going to get to the end of the game by having really, really tight stops. The only thing that does is invite over leveraging. And that's really what you want to do. You want to have really, really tight stops so that you can have bigger positions on. But really what you're doing is you're compounding the concern and worry and psychological effect of that trade. You're putting way too much emphasis on money instead of just saying, okay, I'm willing to take a certain measure of risk. I'm not worrying about having tight stops. I'm more focused on where the market wants to go. And I can have the freedom to allow price to gyrate all around and not feel the impulse of, am I right or wrong? Am I going to lose money or not? Oh my gosh, I need to do this. I need to do that. Yeah, I'm not worried about that. I'm not worried about any of that stuff. I'm worried about, okay, where am I ultimately wrong? Okay, and I want to have a stop just a little bit above that or below that, and then build in some ideas. And then it gives me a decision point where I can say, well, if it gets here and just falls short of it, I'm okay. I won't do anything with the position. But if we go through this order block here, which is the up candle prior to the down move, if we do that, then I got to take inventory and say, okay, is this a really good signal still? Is this something I would still be wanting to be short right now? And would I expect further breakdown if it does that? When you have freedom to do that and room, you need some range to be able to operate in. I mean, if you have these really ultra short stops, you don't have time on your side. You have zero time to collapse that. If it's something that you can collapse and save, and think about what you're doing. You're asking the market to give you a setup that gives you less than 10 pips on a stop and maximum leverage with no time element that would be on your favor, because 10 pips can be done instantaneously. It can happen, no time at all. You have no way of protecting that full stop on 10 pips. Does that make sense? If you're listening to all this stuff and it's over your head, it's because you have not filled in the gaps of your learning with the 3 tutorials series that's on my free members area on the website. You have to study the Sniper series, the Precision Trading Concepts, and the Market Maker series. Okay, it's not a lot of content. You can do it probably in the scope of a week and a half comfortably, and that'll bring you up to speed about everything I'm talking about here. Again, if you're focusing on expecting to know this stuff the first time you're in here, that's not realistic. You're not going to survive this mentorship if that's the expectations you have. Okay, so here we have it. So now we're going to take one of them off. So now I have one position, one lot still on. Now I can lower the stop to this level here. Okay, so now I have 12 pips at risk on one lot, and I've booked a profit with a stop run below these lows. So now I'm in a position where I don't care what the market's going to do. I can let myself relax. If the market's going to continue going lower, fine. If it's going to come back, fine. We got 20 pips from London. We got, I'm not sure what I just took on that that trade. We'll check it in a minute. We don't count our money while the market's still rolling. The last order of business is down here at 62 pips. Okay, so now we're below these stops. We really want to be focusing on the dollar. Does it want to expand up? See, these are the things you don't really see me doing when I was doing live sessions on YouTube. I'm talking about the markets, I actually am looking at these other charts, but I can't go back and forth on YouTube and reveal the things you're actually learning here. So all I'm doing is looking for a pair outside or conversely, or inversely rather, to the pair I'm trading. So if I'm trading short cable, I want to pick a pair that's inversely related, which would be dollar CAD, okay, and I'm going to look at the dollar index. And I'm going to weigh out the strengths of, does the US CAD want to rally when it's overly bullish? I'm not focusing on Swissy. I'm not focusing on dollar yen because they are not primarily bullish. This pair with the dollar in front of it, okay, this pair is strong. So if the dollar is going to rally, the strength should be reflected immensely in this pair. And it would be the inverse relationship to what I expect to see the weakness on the cable. Does that make sense? To manage it, where it's like on set and forget, and I'll teach you all this stuff, but I'll give you a real quick synopsis. You would do 2 entries. This is one way of doing it. You can do 2 entries, individual entries at 2 single lot entries. And you would put one of the single lot limit orders below these lows, and then you would have the other remaining one down at a level. It don't have to be this level. I'm picking this one because it's before the other area of liquidity below where we are at now. And there's no saying that we're going to get down to that level, but nonetheless, you would just put it in limit order capacity, and your stop would just have to be where you initially set it. And then you have to be able to monitor that. Get up in the morning, check New York. You have, if you're trading London, you have to be able to get on your phone or get on the computer at least once by 8 o'clock. Between 7:30 and 8 o'clock, you need to be able to look at time and price at that time, because it'll give you an opportunity at that moment to reduce the stop or weigh out whether or not it's still a good trade. So if you can't do that, then you can't trade. I'm just telling you like it is. I mean, you're going to have to be either watching it live or managing it at least by looking at price between 7:30 and 8 o'clock New York time, because you have to, you can't escape the time windows when these markets are moving around, and that's relative to the kill zones or the trading sessions. The liquidity is going to be consumed specific times of the day. So it's important that you know that you may not have free time in London. You may not have free time in New York. That means you're going to have to be in Asia or Australian Kiwi or Japanese yen trader in North American Asian time. And that's just what's going to happen. That, or you're going to have to live on the higher time frames, which is nothing wrong with that. I mean, it's just going to be a lot less trading, and it's going to be a lot slower. And it takes a long time for daily charts to make their swings unfold. But for some of you, that might be perfect. All right, so it is 9:37. We got about 7 minutes into the equities open. I hate these kind of days, though. I loathe these kind of days because it takes so much energy to expend on just a little bit of movement. I mean, it's gratifying because I'm able to explain it to you in terms where you understand what you should expect to see, and then watching it unfold. How much time have we spent? Literally, seriously, think about how much time we spent just today. It's a lot of time, right? So you're not always going to get these big expansion moves, daily ranges that are one side of the market, where it's easy, where it happens in a flash, inside of an hour and a half in London, or 45 minutes in New York, you get everything you're expecting to see in the run. They're not always like that every single day. And this is what you're going to have to contend with. I'm not going to repeat some of these things you guys are saying. But we're going to, I'm going to collapse this here because this is a really, really long session, and I got to go through and edit it because there's a lot of time where there's no talking. So I'll speed those sections up. I'll monitor this this position through Twitter. We're going to watch and see if there's any further effects at 10:30 when the crude oil inventories come out, and we'll see what we see. We've already booked a profit on London and New York. We're paid. We're in a position now we can just wait, and we want to wait and see if it's going to come down here and expand down to. Right now, the limit order I have for profit puts me at 62 pips on the second half of the position, or the single lot remaining, basically. And that comes in the form of I don't know what the hell it is. I can't see it without pulling everything out. 31.32. So I have a limit at 31.32, which actually I might round to 31.35. I don't like being at the 2 level. All right, so there you go. There's where my limit is, and if it gets down there, great. If it comes back and stops me out, fine. I ain't worried about it. I'm already paid, and I can go about my day and do whatever I want to do. And I'm going to the Cheesecake Factory, so I got to resupply, and I will catch you munchkins later on in a recap. In closing, before I close this out, you guys learning anything? Are you learning even in slow markets you can pull out some stuff? Very good. Just want to make sure you guys are getting value. I will catch up with you. There'll be a recap posted by 3:30 p.m. this afternoon, my time, New York time. And then we'll see what the economic calendar gives us. I haven't looked at for tomorrow yet, but we'll determine whether we're going to be doing anything in London again or if we'll wait for New York. So have yourself a pleasant afternoon. If you have any questions in here, I'm saving the log right now, so I will be able to go back and fill them in on a weekly roundup. And I will bid you adieu, folks. Thank you. Good luck and good trading.